So pretty much what it is um, what I'm gonna do is I'm gonna show you for example. So what you, like the whole point is you want to wait for the signals to show up. So the little circle signal is letting you know like get ready for the flip. So it's using the RSI Bollinger Band thing, and then Heikin-Ashi, that EMA 26, and then the super trend on the like tells you the trend at the higher time frame. So when this signal flips, the little circle is telling you like watch out. So this one, like I have an alert on, it tells me, all right, look at this chart pretty much. So once this shows up, now I'm looking for the Heikin Ashi to flip into the green one. And then that's my entry. So pretty much after the circle, just ignore the little triangle for now. Like after the circle, I would take entry there. And then my exit is the next Heikin Ashi that is red. So the little triangle is like confirmation of the trade. So this is get ready, there's a trade coming, and then this confirms it. So a lot of times there's this like shit. So the whole strategy with the Heikin-Ashi is to make sure I don't stay in a trade too long, or I ride it out as long as I can too. So like this one, I would have looked for a trade. For example, this is after hours. My bad. But, all right, so here this is almost at the close. So pretty much, I would have looked for a trade starting here. So the trade for me is when this flips green, but also like I want it to be below the EMA too, but it's still a trade. Like it could still work out. So technically, you would take this trade here on this open, stay in the trade until it turns red, and this is where you get out to confirm it doesn't start dragging you down lower. So here, wait, like after 8:30, I do look at it. So here it's letting me know, all right, watch out, there's a trade could be coming. On the flip, I would take the short. So I would take entry on this close, so like at this open, and then I would exit here. Here, I would be looking for a trade. I'm not taking this trade because the Heiken actually hasn't flipped yet. So I'm looking for a trade, looking for a trade. This flipped here. I would take entry here. I would get out right here. Now let me show you some that work because these kind of are shit. But the whole thing is to protect against staying in a trade too long that you don't want to stay in. So here, for example, this is a good one. So right here, let me know. All right, look for a trade on this flip. I'm gonna take this short. I'm gonna get out here. Now, easily here, this is like a 20% loss, 30% loss on this flip here. But what will happen is, it's like you kind of want to see it flip again. If you see it flip again, then you can still take the trade. It doesn't have to be immediately after because sometimes the RSI can ride above for a little bit and then give you the trade a little bit after. So the confirm is the breakdown below this. So technically, I would have taken this trade here, got out, entered again here, got out, entered again here, and stayed in this trade through until here. Or maybe, I mean, yeah, chances are I would have ignored this one and stayed in all the way through here. See another one. So lets me know, all right, wake up, there's a trade, entry, exit, entry again, ride it out to here. So what I'll do is, for example, I'm gonna go on demand and show you like what this one looks like. And then the sizing in thing is once you're confirmed, so the entry is here, for example, on this flip. After this flip, the entries on this candle's open. On this next candle, if it closes and it flips red, like here I would have taken another entry, even though it's green, I would have taken another entry here, and then I would have closed out the entire position here. So same strategy here. On this flip, I would have taken an entry, I would have added another contract, and until I feel satisfied. Until I've added like two contracts or one, until I feel satisfied with the trade, let it ride, close it all out here. So so I'm gonna do this trade here on demand so you can see it. So 10:42 is the signal on July 13th. So I would have been looking for a trade entry on this candle close, which on this candle open, which is 10:57. So July 13th at 10:57, I would have entered this short. So I'm gonna go back to July 13th. And 10:57. So as soon as I saw this flip, right here, this close on this open 10:57, I'm entering short. So let me do that now, and sometimes this takes a second to load. And I want to make sure I'm looking at the right chart too. I was looking at the QQQ. Yep, right one. All right, so this is set here. So it's 10:57, 8 seconds, QQQ 13. I'm gonna buy one strike out on puts. So I'm just gonna grab this guy. Then I'm gonna go back to my chart, watch that. So here at 10:57, I took this entry short. Here since this bar closed red, here at 11 a.m. I would have added another contract. So let's go back and go to 11. So pretty much every 3 minutes, I'm making a decision, which is pretty cool. You don't stay in the market, you don't stay in too long, you stay in just enough. So here I'm adding another contract regardless of what price is. So it could be averaging me down or it could be averaging me up. I don't know. With the Heiken Ashi, you don't know because it's not the right price. But that's why I like this, because it's like the rules are the rules. All right, so I just added another contract right here on this candle. And then this candle would have started printing the triangle, so it's like here, if you didn't see anything here forward, this would have been like super, like, oh, the trade's coming. But what happens is, right here, it turns into another green candle. If I start seeing the Heiken Ashi like losing its juice, like I don't see the big fills like this, then chances are I'm not gonna add another contract here. I'm just gonna observe this most likely, and see how it looks on the next open. So like, this hasn't closed yet. So right now it's 11:04, and I'm watching this candle. And as soon as it closes like this and this one opens, I'm gonna close the trade completely. So at 11:06, right at the open of this candle, I'm just gonna close out the trade. So let's go back here. Where is it? Here. So at 11:06, right at that open, I don't care if it's in profit, not in profit, doesn't matter. Close the trade. I can't ride it, and it's flipping the wrong way. So I'm gonna wait for this to load. It's gonna update the contract price. All right, not too bad. So I'm only down 2% on this one. So I'm gonna just close it, sell both. And another thing I do is the quick trade shit. So I go here, whatever contract I'm in, I just send it to my red chart, which is this one here, and then I'll just do a quick sell like right through here. So all I do is pick whichever amount I have, one or two. I can just hit buy market, sell market too. I can just sell market and get out right away. The only thing that's bad about sell market is like oh shit, it was the wrong contract. Wait up. Oh no, this was it, yeah. So the only thing bad about it is like the slippage on the sell market. But it's the same price, 60 cents. So, all right, mad off track here. So, I'm out of that position, 1106. So we're going back to the chart, and now what I'm doing is I'm keeping my eyes out for it to flip again because the trade's still in play. It got flipped. You know what I'm saying? That whole. So now again, another signal of hey, wake up. The trade might be coming in, and then confirmation before the flip, which is pretty cool. So the entry would have been here because I'm waiting for the red bar confirmation. So my entry would have been at 1118. So back over here, we're gonna go to trade. We're gonna go to 1118 on the open. 1749. I mean, sometimes a few seconds earlier too, because I know the bar's gonna close if it's like 59 or something like that. But and here we go. So I'm gonna get another put here. So I'm gonna grab the one strike out. Okay, I'm in that. So let's see the chart. All right, so now I'm in this trade here at 1118. So at 1121, I'm gonna add another contract. So we're gonna go back. 1121 or 2 or whatever, it doesn't matter. It's just really just adding size to the trade. So let's just say, for example, I'm only gonna add one more contract. So I just wanted to trade a total of 2 contracts on this. Alright, now I'm in this trade and I'm gonna wait until the next flip on the Heiken Ashi. So I'm gonna wait all through all this. So I'm gonna ride all this down, and then on this candle I'm gonna exit. So on this close here. So I mean I'll be watching it. So the closer it is to closing, I'll probably exit sooner than waiting for the open here. But just for the sake of the shit, it's like the exit is at 1151. So we're gonna go to 1151 right at that open. So this is like 15 seconds before that open. Let's see how good this contract did. %. Not bad, right? Just knock these down, or you just go to the quick chart shit and just sell them right there. Like, it's weird right now. Oh, here it is. Yeah, it's weird right now because that's not the price of the contracts. They're 150. But yeah, you just close them out, take your gains, rinse and repeat. So that same exact procedure every time. So another one here. Watch for it. Oh shit, I wasn't showing you the screen on the other one. Or maybe I was. I don't fucking remember. But we bought the contract at $1 and we sold it about $1.50 something. Or $1.40 something, I can't remember. But again, it was about a 40 something to 50% trade. But here another one. This is a banger right here because it's a clean trade. Like there's no flip, so all you do is you see this at the morning after 8:30. It's like, all right, watch out for the trade. The trade is on the flip. So these, thank God, you can't trade this, but this one you can. So your entry is at 9:45. So I'll just show you this one for example. It's a very clean, just straight trade. Mad long. Thinking, hey, I'm just gonna show you how I do this real quick, bro. What's the entry at? 9:45. All right. So 9:45 on July the 12th, and it's the same day. So this is definitely a good one. So, oh no, it's not. This was the same day. All right, this is a Tuesday. this is entry at 9:45. Fuck. It's the same shit. QQQ. Yeah. Alright, so let me reset that account. Alright, so same shit. QQQ on the 12th. So I'm buying the next day's expiration. And of course, this shit will break right as I'm showing you it. Alright, here we go. We got so 12, 9:45, and it's a put. Yeah, I'm taking a put. Oh fuck. Whatever, man. It's good. Like that's probably easily like a you already know. So the price went from let's see regular candles. That was this one right here, the 12. So the price went from 291 on QQQ down to 287. So that's literally like a 3% move or 2% move, almost 2% move in like 30 minutes, and then you're playing next day. So easily that was like 150%, 160, 70%. It's just kind of fire, man. I just gotta master this exiting. Like I literally just added that whole I can't actually exit shit. So when the flips, you just get out and deal with it. Before I wasn't doing that. Before I was like holding on to the trade, thinking it was gonna flip my way, which just that shit was not working out. So, but it's pretty cool. Like say for example, you see this too. Like you know it's a trade. You watch this flip. You can also catch the flip back. So like like we came from down here, gave you all these signals, watch for the bounce off the EMA, and you take your entry on the first one and ride it until the Hikenshi actually changes. The only thing about doing it this way versus this way is that you're not buying when the contracts are like too beat up because the volatility is already up from this. The contracts are already up from this, and the volatility is up from this. It's like when you buy these contracts, like the whole what is it called? The IV is just up, and then the other shit is up too. So these are like they're already more money. So like your gains from here to here is not the same as your gains from here to here. So for some reason, the best ones are when you buy not the bounce, but the initial flip around. So like this short right here. This short right here probably doing pretty good. The longs are good too. So like say for example, this one would have been a really good one right here, right at the open. Right here would probably have been decent. There's hella trades. It's just managing managing the losers, and not letting them destroy their account because these rip. All right, I'm gonna stop there.